Hello everyone, this is Joy. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, steel prices in China generally moved in a stronger and still volatile pattern. So what is really driving the market right now? Let's break it down. One of the biggest factors influencing the market right now is the ongoing geopolitical tensions in the Middle East. These tensions have pushed crude oil prices to remain high, strengthening the overall energy sector. At the same time, transportation of iron ore has been disrupted, which has further supported prices of upstream raw materials such as coal and iron ore. And interestingly, iron ore prices have now climbed above $105 per ton, reaching the highest level since January 19th. Meanwhile, coking coal prices are also near their highest level in the past 2 months. In one word, rising raw material costs are providing support for steel prices. Looking at the supply and demand fundamentals, downstream industries have gradually resumed operations after the holiday. As a result, spot market transactions have improved and demand is showing signs of seasonal recovery. However, on the other hand, the market is still facing some notable pressure. Inventories of both steel products and steel billets continue to accumulate. In addition, with the temporary production restrictions during China's government meeting now ending, steel mills in North China are expected to increase production, which may further add to supply pressure. Overall, the market is currently being driven mainly by cost factors and macro sentimental, leading to a fluctuating price trend. Next, let's examine the supply and demand side. This week, apparent demand went up by more than 1 million tons. Inventory went up by nearly 230,000 tons, and production went up by nearly 240,000 tons. So while demand is improving, both inventory and production are also rising, meaning oversupply still exists and continues to limit further price increases. Looking ahead to the short term, geopolitical tensions continue to influence energy prices, and through that channel, we are supporting steel raw material costs. So this means steel prices are unlikely to see much drop. However, the supply and demand balance of the steel market is not particularly ideal. High inventories and expectations of steel mill production recover may reduce the chance of price increase. Putting all these factors together, we expect the China steel market to maintain a slightly strong but volatile trend next week. And of course, there are two key things we need to watch very closely: how fast steel mills resume production and whether inventory start to decline in the coming weeks. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye!